So what do we have here? From Zero Hedge, as a matter of fact. Quick look surprised. I barely covered this when we first noticed it. Hurricane Harvey. What about all those mortgages that are owed on these houses that have been destroyed? Now, you're a bank, or whatever lending institution, you've lent a lot of money out there, and nobody's making payments at the moment. The houses are destroyed, whatever, people stop making payments. How does this affect that industry? What I'm about to read you. $700 billion, so $750 billion, unpaid mortgage balances in Hurricane Harvey and Irma disaster areas. Now, I understand the title is a little bit tricky, where it says unpaid balances, okay, or whatever, unpaid mortgage balances. Well, if the houses were destroyed or not, they're still the unpaid balances. Question is, what is the fact that the damage area has to do with this? Well, I guess they're saying money still owed in some of the most severe destroyed, whatever houses. What's going to happen with that? My question is, can the insurance industry take a beating of $700 billion? The answer to that immediately, without even thinking, not a chance in hell. They cannot take a beating like that, which means they'll have to be bailed out. The other issue is the banks just stopped getting a ton of mortgage payments, stopped completely. All these people who are out of their houses, out of work, whatever, they're saying, total loss, I'm walking. I was underwater in my mortgage anyways, I'm walking. You're going to have a bunch of those. Who knows how many? All I know is the banks have just stopped receiving a lot of monthly mortgage payments, to say the least, one way or the other. And as Zero Hedge says, even as the damage from hurricanes Harvey and Irma is still being tallied, a preliminary assessment released last week by Black Knight Financial Services estimated that as many as 300,000 borrowers in the vicinity of Houston could become delinquent on their loans, and 160,000 could become seriously delinquent or more than 90 days past due. That number is roughly 4 times the original prediction because new disaster zones were designated and more homes flooded when officials released water from reservoirs to protect dams. In total, the number of mortgage properties in Texas disaster zones is 1.18 million. That's the number of homes. With Black Knight adding that Houston disaster zones contain twice as many mortgage properties than Katrina zones, Hurricane Katrina, with 4 times the unpaid principal balance. Putting the Harvey damage in context, after Hurricane Katrina, mortgage delinquencies in Louisiana and Mississippi disaster areas spiked by 25%. Okay, the same could clearly, obviously, happen in Houston, as borrowers without flood insurance weigh their options and decide to walk away from the property or not. While they will get some federal relief, if rebuilding would cost more than the principal in their homes, they could easily decide to walk away, according to OLIC, whatever OLIC is. What about Hurricane Irma? That was just Texas, Hurricane Harvey. And not to mention, we've got Jose coming in. We've got these other two ones. Jose and his twin sisters coming up behind. And by the way, the whole generator thing, maybe I'll save an extremely quick video for last. That way, you need to see the title. I'll tell you about the generator situation. Hint. RV. Mobile. And Cliff I mentioned that a while back too, but I may go down that path. So what about Hurricane Irma? We just discussed what's going on with Harvey, at least the damage and the potential walk away from homes. According to a preliminary analysis by Black Knight released today, Florida FEMA designated disaster areas related to Hurricane Irma include a whopping 3.1 million mortgage properties. As Black Knight's EVP Ben Grabowski explained both the number of mortgages and the unpaid principal balances on those mortgages in FEMA-designated Irma disaster areas are significantly larger than in the areas impacted recently by Hurricane Harvey. Quantifying the damage, Black Knight calculates that Irma-related disaster areas contain nearly 3 times as many mortgage properties as those connected to Hurricane Harvey, and nearly 7 times as many as those connected to Hurricane Katrina in 2005. In dollar terms, this means that there is some $517 billion in unpaid principal balances in Irma-related disaster areas, nearly 3 times the amount as those related to Harvey, and more than 11 times of those connected to Hurricane Katrina. Now, granted, let's be fair, just because a zone's designated a FEMA zone doesn't, does that automatically mean severe damage? Is my area, was it designated a FEMA? I mean, I don't think it was, actually. But whatever. While the total extent of the damage from Hurricane Irma is still being determined, it is clear that the size and scope of the disaster is immense, said Grabowski. Indeed, in terms of the number of mortgage properties and their associated unpaid principal balances, Irma significantly outpaces even the number of borrowers impacted by Hurricane Harvey, with FEMA expanding the number of Irma-related designated disaster areas late Wednesday, September 13th, to a total of 37 Florida counties. More than 90% of all mortgage properties in the state now fall into such areas. More than 3.1 million properties are now included in FEMA-designated Irma disaster areas, representing approximately $517 billion in unpaid principal balances. In comparison, Harvey-related disaster areas held 1.18 million properties, more than twice as many as with Hurricane Katrina in 2005, with a combined unpaid principal balance of $179 billion. Irma-related disaster areas now contain nearly 7 times as many mortgage properties as those connected to Katrina, with more than 11 times the principal balances. Combining the preliminary estimates for both Harvey and Irma suggests that over 3.3 million total mortgage properties are located in Irma and Harvey-related FEMA disaster zones, while the dollar amount of total unpaid mortgage balances in these two zones is massive. Between Irma's $517 billion and Harvey's $179 billion, that's dollars, the total potential damage could impact as much as $696 or $700 billion in notional mortgage values, which banks could be on the hook for if current occupiers decide to simply walk away. Girl, don't walk away mad. Girl, just walk away. I always wondered what that 80s song was about. No, it does not have anything to do with freaking walking from your mortgages. Based on back of the envelope analyses by Black Knight, an extrapolation of the Katrina damage would suggest that Florida could suffer as much as 750,000 mortgage delinquencies as a result of Hurricane Irma. To be sure, there are mitigating circumstances, not both, but Florida borrowers likely have more insurance and less exposure to loss. But for those homes with the most damage, homeowners will be making the same calculation as those that suffered devastating flooding after Harvey. Another issue in Florida, according to Olik, is that even a decade later, the housing market is still recovering from the foreclosure crisis. 5% of Florida borrowers still, that's not a lot though, still owe more on their mortgages than their homes are worth. And an additional 5% have very little equity in their homes. Home prices in Fort Myers, which saw considerable flooding from Irma, are still 29% below what they were during the housing boom. That's interesting. Still, in order to avoid a surge in foreclosures, lenders are more likely to offer borrowers, even seriously delinquent borrowers, options to catch up. Although the biggest risk to lenders will be in Houston, where some homeowners may see no good reason to stay. There was some silver lining, though. As Irma forged its path of destruction through the Caribbean, One relatively positive development was that Puerto Rico escaped the direct hit many had predicted. From a mortgage performance perspective, this was particularly good news, as delinquencies there were already quite high leading up to the storm. At more than 10%, Puerto Rico's delinquency rate is nearly 3 times the average of the U.S., as it is 5.8% serious delinquency rate. In contrast, the disaster areas declared in Florida have started delinquency rates below the national average, providing more than a glimmer of optimism as we move forward. Unfortunately, Hurricane Maria, now a Category 3, is expected to hit, this is how we do it down in Puerto Rico, sometime on Wednesday, adding to the damage already suffered from Irma and potentially sending the already bankrupt territory reeling even deeper into the financial hole. Remember, I said if this hurricane or the first one hit Irma, hit Puerto Rico, I said, I would not be shocked at all. They already voted 90-something% of the citizenry there. Oh, we want to join the U.S. as a new state, the 51st state. Okay, well, the U.S. has to now decide too, right? If the delinquency rate's already horrible now. If this happens, it's game over. They'll never survive. They'll have to, they'll be begging and pleading. Will we allow them? That remains to be seen, but, allow them to join. But you could be rest assured the news headlines are going to start flashing, should we basically feel bad for Puerto Rico and let them join as a 51st state and, help them out. That kind of a thing. But we'll see. Take care.